Welcome to Homes Gone Wild.
They're going wild.
Homes gone wild. They are going
Really
wild.
So to start this off, to get everybody to know you, just tell us who you are, where you're from, how you got into this business, and let's move forward.
Yeah, awesome. Yeah, first off, thanks for having me. I appreciate it. My name's Trent Cady. I work with Corcoran Global Living here in Del Mar. Grew up in San Diego, went to Torrey Pines right up the street. Went to University of Colorado Boulder, graduated there in 2016 with a degree in marketing and real estate. Came back, actually did loans for the first 3.5, 4 years out of school. So I got a super good background in VA, FHA financing, jumbo, just kind of the whole gamut. It really gave me a different perspective from the buy side. So super grateful to have started there. And then a spot actually opened up on my father's team over here in Del Mar, and decided to try it out and fell in love with it. Honestly, I mean, I grew up right up the street from here. We know a lot of the families in the area, and it's just it's natural. It doesn't feel like selling. I'm just kind of providing the value that I have of the spots in the area and what makes different pockets of San Diego so special. And I've lived in pretty much each one. Grew up in Carmel Valley and Del Mar area. Grew up surfing all these breaks right here and hitting all these restaurants. And, so it just makes it nice.
Makes it easy.
Yeah, exactly. I know these areas like the back of my hand.
Generational real estate family then.
For sure. Yeah. He, like I said, I work with my dad. He's been in it for about 32 years now. We help buyers, sellers, investors, and have a pretty large property management company. So all fronts, we like to be able to service our clients.
That sounds great. How's it working with your family? Because I always hear some mixed stories on it.
It's positives and negatives, right? I got out. I was like,
I got my own story. Yeah. It's miserable.
Yeah. It was, at first I was like, no way, there's no way I'm doing it.
Yeah.
But I wanted to find out. I wanted to come back to San Diego because I love it here. And I wanted to find kind of like an ancillary business where I could provide value and maybe tap into the things that my family has built here without working with them directly. So originally I thought loans. Come to find out, I was at, kind of a private mortgage bank, and I was losing a lot of business. I mean, they're higher priced homes here. So was losing all my jumbo business really.
Yeah.
And so that became, a pain point. And I started to see that, and I dove into other areas and started doing things differently. But at first I was like, there's no way. And after about 3-4 years, learning with somebody else and, getting involved in the industry and seeing what I was good at. When a spot opened up, I decided to give it a go. And I think it was nice because I came in with a heavy background, so I didn't really have to learn as much from him off the get-go in terms of the baby steps. Right? Like writing contracts, understanding terminology, stuff like that. That would
terminology, I think.
Yeah.
I think that's the hardest part because
for sure.
We said this, we were talking to another guest, and for like one word, there's 20 synonyms. And then for those 20 synonyms, there's like 50 acronyms. Then everybody has their own lingo for each one. It drove me nuts.
Totally.
Like book you can look at and go, oh, what's that's the definition.
It's like Laguna. Laguna talk. It's like we all have our own words.
Well, it's like California.
I'm sure Del Mar has too. Yeah.
Yeah, exactly.
You got up north, you got Hella. That was real big.
Yep.
Down where we're
county
at.
by county.
Yeah.
It's too many.
Too many to list off. Most
for
of them
sure.
We can't really say on the podcast, but
it's Homes Gone Wild. You could say whatever, I thought.
Yeah.
Yeah.
We're easing into it,
We don't want to scare people off right away.
Not right.
Right. That's later in the show. They stick around. Yeah.
So, it's interesting though, and this is something I always find with people that are the most successful in this industry. They always talk about a service or value add, right? Because, in this industry, you can't really be a salesperson, right? because
Totally.
what are you
Yeah.
selling? You're selling something that everybody has around you.
Mhm.
The only way you can really differentiate yourself is with what? With the value add. So kind of speaking to that, I mean, you have in-depth knowledge on the finance side of it, especially for some trickier loans like FHA, which I do not like those loans. They're just basically subprime.
Yeah.
But
Dude,
with your
first
family,
time home buyer, come on, man.
you can go conventional, 3% down.
I know, that's true. That's true.
But what was I going to say? So with that though, I mean, what kind of value do you add? 'Cause you have all this knowledge, you have the experience. So what else is there?
Yeah, for sure. Great question. I mean, I know it is such a commoditized business. There's so many, everyone, you go to the restaurant down the street, there's probably 10 agents in there out of 25 people, right? But I'd really say that, our unique value add is especially property management has been huge for us. It's a total, pain in the ass, excuse my language. But it allows us to provide a different level of service to high-end homes around here. And it allows us to put a lot of off-market deals together. Last year we did 14 off-market deals, which I think is extremely unique for, any area. I know when owners are going to sell, what they'll sell for, when leases are coming due. And I think that really adds a different element on the buy side.
Absolutely.
Cool. So that's been one of our really big value add components, obviously parlaying what my father's built here in terms of, all of our contacts, electricians, plumbers, roofers, flooring guys. We give all our clients access to a complete list of everybody they work for. And, they typically give our clients better pricing than everybody else because we're referring them so much business. They know, that if they come from us, that they're a good client. And, we need them to treat them properly so that we can continue to feed them business.
Oh, that's huge. I mean,
yeah.
Encompassing all aspects of the homeownership, not just, here you go, here are your keys.
Yeah.
See you later.
Exactly. Like coaching people through, how to draw up a lease. I mean, how to screen tenants. I mean, because we don't want to manage every property, right? But I think everybody wants to get educated on the side of, okay, well, I want to rent my place out. I can manage it myself, but I don't know how to get a tenant, or I don't know how to draw up a lease or something along those lines. It's always something that I just help people do just because, they're going to refer me more business. I'm going to be able to help them, their friends and family for years to come. And, it's never about one deal for us. We do a lot of things for basically free, I mean, and it's fine, because that's how our business grows, is word of mouth, referral.
Mhm.
And, people know that the service and the value that we provide. And we really have a unique yin and yang, I would say, between, you kind of got the OG 30-year veteran. And then, me, I've been in it about 5-6 years now. And, I'm grinding, cold calling, trying to stir up things that are, just off market and add value to my buyers and sellers.
Yeah.
So just kind of whatever we can do. Now we got the whole social media, Google ad presence. I mean, we're diving into things on the sales side that, really reach as many people as possible for listings. So, on all fronts, I feel like we have a pretty competitive value add.
Yeah, I mean, that's huge. I mean, you're encompassing everything. I mean, especially it sounds like you guys work really, really well with investors.
Yeah, I'd say
here's an off-market opportunity. This already has tenants in it, needs a little renovation, but we got top-notch guys that will actually give it a discount because we work with them so much. I mean, that to me, the only thing you're missing is a strong finance partner.
Yes, exactly. Yeah. And then they come and buy cash, delayed financing.
Yep.
Get their money back and move on to the next one.
Nice. Yeah, that's what a lot of people, I mean, because you've seen this probably a ton down there, is how many people pooled money together and just bought real estate as an asset, as an investment.
Yeah,
a lot of people don't know about delayed financing. So with your background, I mean, that's huge. Most real estate agents don't really typically know about.
Let's go into that a little, delayed financing, just so people can understand kind of what that is.
So you want to
Yeah,
describe it
go
or?
ahead.
No, it's all you,
Either
man.
way. Yeah.
No, go for
Yeah,
it.
no, of
You
course.
go, and then
Yeah.
I'm sure you can add something, right?
Yeah,
Oh,
I'm sure
totally.
you'll be able to add a little bit more to it. Yeah, so we really help so one strategy off market's shifted a little bit, right? So it's now turning into more of a buyer's market. 4 months ago, it was a heavy seller's market. So we were doing everything possible to add value to our buyers to get their offers accepted. And one way is to close cash and do, what we're talking about, delayed financing, which is refinancing the home. The exact LTV, I guess, depends on the lender, but maybe 75, 80% of the home. You get your cash back if you refinance, and you get the better purchase, the better terms. So the terms of a purchase, meaning better rate, if you refinance within 90 days of close.
Yep.
And if you don't
it can actually go all the way out to 60 days, or not 60 days, to 6 months.
Oh,
6 months. Oh, that's great to know.
Doing 12 months now.
Gotcha.
Because,
So,
I mean, in this industry, it's there's always these ebbs and flows of credit policies, and right now, credit policies are tightening in terms of what a qualified candidate is, but then also you got to get creative and go, okay, well, how else can we drive in business from top-notch clients? And your clients sound as they fit that mold perfectly. If they're buying investment properties, take cash out, buy some more, especially now. Money is still relatively cheap, but it is going to go up and it's going to get more expensive.
Are you guys seeing lenders get a little more risky in terms of their products and what they're offering?
I see it happening I'm starting to see standalone seconds coming, and which is kind of scary because, people are doing, a cumulative loan to value of 95% on a certain property, or even up close to 100%. I mean, that gets more and more risky. They have less skin in the game, or whatever it may be. And we're starting to see it on purchases, right? We're starting to see a 75 first and a 22nd, which is
real quick, because this is a question I've been asked a ton lately. I have friends that have bought their first home in the last 3-4 years here. They're seeing the prices and they're like, wow, I got 200,000 plus of equity, and they're listening to Bigger Pockets and all these podcasts and shows and talking to people, and they're hearing, okay, well, dang, maybe I should take a second out on my home and go try and buy an investment property, utilize that as a down payment for a new property. What would be your guys's take on that in terms of like what they can borrow, like their LTV wise? So say they have, the home's worth $1 million, they bought it for 800,000. What's the LTV that you're seeing that they can pull out to, and you can change the scenario of numbers, but to utilize a second to have a down payment on a new home?
Well, I think it's important to clarify the actual second. So the second in California, it's just a deed of trust. So it is an actual, it's a closed loan, meaning the full amount's already been withdrawn. And so we're seeing the max up to that on a primary residence is 85%. However, though, the smarter route to go is there's actually a few different avenues to go down. One is do a HELOC. Right? Do the HELOC. Chances are, because it's an open end, you don't have to meet ATR, the ability to repay. The interest rates may be lower, or they will be lower. You can go to a bank, get it done through that, right? Because they're depository and they're lending out all the money that's been put into their bank. And so then you can take that and go buy another property. And that's where your expertise would come in, of saying, like, for instance, we teamed up and said, okay, well, here's where, here's how we can provide you the financing. But the most important element of it is finding, one, the right deal, right? Because in any market, there's always a good deal. It doesn't matter. And the second part of that what is going to be the appreciation, and what would be the gain of it, right? So how am I going to be underwater collecting rent? Do I have enough reserves set up in case let's say the unfortunate happens and we go through another pandemic,
Mhm.
do you have
Stop paying?
Yeah.
And
Prices
I
shoot
meant,
up again?
sorry.
Yeah.
Yeah. Sorry, I didn't mean closed and I meant HELOC.
Yeah.
In terms of just like when to draw on it and like how much you could draw in terms of like your LTV.
Yeah. So that's kind of going down to it all depends upon the investor on that. Right.
Gotcha.
But what I've seen is up to 85% on a primary residence. And that's a cumulative loan to value. And then the other part of it is, is people want to get, if individuals want to get into investing in real estate and they've never done it before, I always encourage them to form an LLC, get some friends or team up with other people, and everyone can pitch their money in to that LLC, and everything's divvied up. So that way there's less risk on the actual individual instead of just one person, there's multiple. And, and then from there, you can there's a couple different routes you can go. One route you can go is you go hard money, right? Let's say it needs a little bit of renovation. Okay, you bought it, you're borrowing money to do the renovation instead of dumping in, $60,000 of your own money, to do the renovations, you're borrowing money at say 5%, 5 to 7%, something like that. And then you go into a long-term hold when we have these portfolio products, which don't include income, don't include employment, taxes, anything like that. It's all based upon the cash flow of the property. And because it's in an LLC, you then can close it in the LLCs, which gives that investor better protection. And there can also list it, say, okay, I want to do a 30-year term, but the first 10 years interest only, right? Which is better than an ARM because it's a fixed rate all the way through. So that way, let's say if the rates jump up, in 10 years, you go, all right, well, I'm still at this 6%.
Yeah.
Right.
And switches to principal and interest.
Switches to principal and interest and is amortizing over that 20-year period. But the rents have gone up in 10 years, they're going to go up. So chances are, but an investment, as you know, I mean, you're holding on to it for 3 to 5 years. It's an investment, it's a transaction. That's all there is to it. So those are the three avenues I always try to steer people down.
What about that guy last week? Didn't we take him up to higher than 85 LTV on the community? Guy? No. Oh, okay, but he had a first and a second, right?
Yeah, he had a first and a second. And that was first to home. First price was 1.95. And we have this really unique program. It's kind of like the COVID relief program. And so if there, if you're getting a larger home, or if there's a gap in employment, and depending, especially now with the guidelines and credit policies tightening, it gets a little tough to qualify.
Yeah, for sure.
So what this program does, it's set up by the CDFI, and there's no employment, no income, no taxes needed. It's all based upon your credit score, and whatever your credit score is, then you'll need a reserve requirement, right? And the reserve requirement will be based upon principal, interest, taxes, insurance, association dues. But it's a great way to get into a home. If you have any kind of credit debt. A lot of people during COVID, excuse me, they got laid off or they couldn't work, right? So this is a great way for them to get that home ownership. They hold the note for a year, and then usually that's enough time for them to fix everything, and then they refinance to a different loan term. And what's great about it, it's for a primary residence and a second home only.
Gotcha. That's awesome. Yeah, what a great way to get your foot in the door.
Yeah, but kind of leaning into that, and I think it's always good for anybody who's just starting to get involved into or thinking about buying a home, is to figure out what to do, right?
For sure.
So if I was coming to you, what would you say? Like, hey, Trent, I want to buy a home. What should I do?
For sure. Yeah. First step, come in, sit down in the office right here. In our conference room, right in Del Mar, grab a coffee down the street and just start chatting. The first step, as you guys know, call you, get pre-approved. First and foremost, I can't preach it enough, as I'm sure you guys can too. It's free. It doesn't cost people anything. It doesn't commit you to anything. It really just, opens up all your options and gives you a game plan for a roadmap to start working off of. Where are you now and where do you need to be to get where you want to go? That's step one. It's figuring out how we're going to do it. I always advise my clients to back into a purchase price. Don't start off by saying, hey, I want to buy something 700,000, whatever it may be. Figure out a payment that you're comfortable with. Where are today's rates? How much are you putting down? Where is that down payment coming from? And based on all those factors, you're not comfortable paying more than $3,500 a month, or you're going to throw a roommate in there. And we know, we've ran the numbers, we can rent a room for $1,500 in Carmel Valley, whatever it may be.
Mm-hmm.
Now we can push the payment up a little to $4,500. Well, what does that equivalent to? How do we back into a purchase price from that payment amount, right? So paying $4,500 a month, maybe that equates to a purchase price of $950, whatever it may be. And then we know, okay, we're capped at $950, right? We're not gonna go crazy in a bidding war when, seller comes back with best and final. It's like, there's no gray area really.
Put on some of those black masks, get a baseball bat.
Yeah, exactly.
Bidding war's over.
Yeah, bidding wars are over. Exactly. But if you're competing against someone, whatever it may be. I mean, or even if the property's listed at $1 million and you cap at $950, that's where we're
make that
stopping.
offer at least.
Yeah, exactly. It's like, if we can make it work, great. If not, there'll be another one. But there's no gray area. You're not like, oh, should I go up to 975? Well, we've ran our numbers, we've done our homework, we've done our due diligence, and we know where you should be and why.
Isn't that kind of an interesting thing though, is the comfort level, and like how it's there's a lot of individuals that don't know what their comfort level is. They assume it is. Mm-hmm. You know what I mean? I always find that interesting.
Yeah, no,
it's no fault.
It's not an
insult to anybody, but it's really, it's when you start really going line by line, going through credit, going what's owed, what are the payments,
totally,
and then okay, well, what's going to be the back end of it all once you get this, what's going to be net to income. Oh, you're going to be at 50%. Don't do it. Anything.
Yeah. Yeah, so I think really just diving deep into what makes a person comfortable, where they want to be, going through that pre-approval process, and then from there, once getting all the the nitty-gritty figured out, then we can really start to go see some properties. I encourage people to get out there. Don't be afraid to call me, and we go see 10 properties. You need to figure out areas, you need to figure out buildings, where you want to be, why. And then we work with a lot of the biggest wholesalers, home flippers in the area. I mean, I guarantee we'll be bringing you, I bring at least 3 to 4 off-market deals to every one of my buyers. They're not always the perfect fit, but, we go through a list of between 5 and 25 properties a week, between all the people that we work with, that are off market, that are deals either being wholesaled or deals that friends know about that are coming soon. Having that, local intel is priceless.
It's huge.
It's huge.
It's really interesting too, because there can be a lot of people that live local and been in the industry for a long time in the specific area, but don't have connections like that. That's
for sure.
Kudos on that one.
Yeah.
But what are the main buyers that you're seeing down there? Because I remember, like in this area, we saw a lot of investors, a lot of cash. Like I was mentioning before. What were you seeing down in your area?
Yeah, very similar. So map behind me, that's Del Mar and Solana Beach. There was a ton of people coming from San Francisco, all these people that could work remote, New York, all these people that I think were cooped up during COVID, living in apartments and things like that. They make great incomes, great salaries, and they can come down to, a Newport, a Dana Point, a San Diego.
Now everybody's remote.
Yeah, exactly. And buy, they sell something up there that, they have homeless people living outside for $2,500 a foot, and they come by ocean views in Del Mar with a pool and killer spot for $1,500 a foot. They think it's actually a deal. And space. So they're like
out and see someone cleaning up human poop off the freaking sidewalk.
Exactly. Yeah, exactly. And so I think people come down, they see the quality of life here. It's, I think in the grand scheme, yes, prices have gone up a lot, but it's still undervalued in my opinion, in the grand scheme of California.
Yeah.
Maybe it's a
think
biased opinion, but
no
agree
way.
with that.
I see a lot of the value
Yeah.
happening. We're starting to see a lot of, and you can correct me on this one, but I've always noticed there's a lot more commercial development happening within the past few years down there.
for
Right.
sure. Oh yeah, like the Otay Mesa, like south down by the border. I mean, that industrial market has gone crazy.
Yeah.
I mean,
And it's
becoming
always
some
really
of
big. It's when I work with investors and they're like, where should I go? I'm like, well, one, let's try to team you up with someone who understands, a realtor who understands investments, things like that in an area you're looking for.
Yeah.
But let's say if they already have an idea of where, right? The first thing I always tell them
Totally.
is, do you see any commercial development happening out there? Do you see any expansion? And because if the answer is no, then chances are there's not going to be a lot of work out there for people. So the appreciation, the value of your property isn't going to be that great. But if you start looking at it down like San Diego, well, there's still tons of land. There's still a ton of area, to build. And what they're doing is, I can see this happening right by the Palomar Airport down there. They started doing that whole industrial area because you have an international airport right down there. And you have, which is going to attract more talent. You have the schools down there as well. And then with that comes more people. And when more people, there need to be more homes. So,
yeah, exactly. I couldn't agree more. Apple's coming down here, bringing 3,500 jobs. I got a client moving here from Santa Barbara right now for that. So there's so many different pockets of Del Mar, but yeah, to your point of who's coming down here, who are the buyers. I mean, in the luxury high-end markets, I'm seeing a lot of cash, a lot of tech executives. That's definitely what I'm seeing in the coastal markets. You got the Claremonts, the North Parks, the downtown San Diegos. That's really, more the first-time home buyer, somebody who wants to be in the action a little more, I guess, if you will. Pacific Beach, all those areas.
I was going to say that, Center of Pacific Beach.
Yeah, exactly. It's a hit or miss area for most people, for a lot of people. But if you're out of college and you're lucky enough to have some money saved up and a good job or something along those lines, I had a buddy that bought down there and right out of school and threw a roommate in there. He was going to live there anyway, and now his property's got to be worth $300,000-$400,000 more than when he bought it.
Well, that's great.
Good savings account.
I mean, so
for sure.
So it sounds like it's becoming more and more competitive. I mean, how do you get your clients' offers to stand out a little more?
Yeah, totally. I mean, so the last few months when it's been like just that heavy sellers market, 15 plus offers, that was when we were having to get extremely creative to get stuff accepted. Now the new stuff is still going quick. You got pockets of San Diego where if it's listed at the right price, you're still getting multiple offers and it's getting bid up a little bit, but you're not running into 10, 15 offers. Maybe it's 1 or 2 now, maybe 3 or 4 on the good stuff. I'm really advising. Yeah, I'd say in certain pockets, but you're starting to see record price reductions and, inventory starting to pick up a little bit. It's up 18% this month. So, what I'm personally advising my buyers, I mean, if you find the perfect property and it's day one on the market, you have to have it. Like, of course, we're going to make a hard run at it and do our best. But where you're getting the best value is properties that have fallen out of escrow once and have long market times. The sellers aren't used to having their property sit on the market for more than 2 days, and they're stressed.
Yeah.
A perfect example, I have one in Mira Mesa right now, which is about 15 minutes east of here. The neighbor just sold for 1.6 in the heat of COVID, right? 15 offers listed at $1,450,000, sold 150,000 over. The seller originally came on at $1,450,000. It was in escrow that day at $1,475,000. And this was about 2 months ago. My buyer, I was like, just hang tight. He loved it, but it wasn't perfect for him. And he calls me 2 weeks later. I'm just keeping an eye on it. I see it fall out of escrow. We wait about 2 weeks, no offers. We're just continuing to follow up. We went and saw it twice. And I'm like, well, where do you see value? You know, like let's run the numbers and see what an awesome buy here would be. And if you could get it, great. If not, don't worry about it. We'll go find a better one.
Mhm.
So we came, we wrote 1.3. We ended up getting it at 1.3. It appraised again 60 days later at $1,475,000 because the next door neighbor just closed in at 1.6. He's walking into 175,000 of instant equity. So I think that's where you're getting the best value buys right now. And I don't think there's a need to get into a bidding war at the moment unless it's the absolute perfect property. So I'm advising, my buyers like, hey, sit tight. It's the market's shifting. You're going to have opportunity. There's good properties out there, and let's find something that's sitting and let's, be aggressive on it.
So it kind of sounds like the best way to get aggressive and really stand out is you already have someone who's pre-approved or pre-underwritten, and all that's waiting is that appraisal. So you go, hey, look, we'll close this thing in 14 days.
Yep.
Contingent upon the appraisal. That's it.
Yeah, for sure.
And because
all conditions knocked out.
You can always throw in and be like, hey, look, all these homes are sitting on the market longer. They're falling out of escrow because a lot of lenders are tightening guidelines, even though the loan's been locked. Some, there's some lenders are canceling locks, and then they boost it up by 2 points, disqualifying the borrower. So it's.
Yeah, I just saw last month a big, God, it was I'm blanking on the name right now, but a big place that. No, it was a big shop that they take a lot of non-QM stuff to. Brokers take a lot of non-QM stuff too.
Sprout.
Sprout, yeah. So
Mm-hmm.
Sprout closed in the middle of one of my deals. I mean, it was like, it was nightmare, right?
Yeah. So you were using that.
Yes. Well, my broker had taken the deal to them. Luckily things went a little haywire. You don't usually say that, but thankfully on that one, it did, because they canceled all the loans.
Yeah. Closed it, canceled,
which is insane.
And that's it. We've seen
something similar that happened to you, that not to name any names, but
not to name any names because they're still an investor of mine, and they actually did me really well. But there was a what a lot of companies are starting to find right now, because there's all the tightening, and a lot of people don't understand that here's a lender. The lender is going to sell it off to a secondary market, right?
Yeah.
That secondary market will have liquidity issues. And so I've seen this happen before. Is there's a big pool of loans. Someone has that sitting on their warehouse line of, the warehouse line of credit. Say it's, 500 million, 600 million. And their other warehouse line's already maxed out, but they're banking on this one to be sold, this pool of loans of 500 million to be sold. But that investor on the secondary side goes, sorry, we can't do it right now. We're having liquidity issues or whatever the reason is.
And everyone's like, wait, what?
Yeah. And they delay everything. So we're starting to see that happen quite a bit, which is just the way of the world. Right.
No,
now.
For sure. Yeah. Yeah.
But
crazy times.
Your clients must have just been devastated on. They're buying a home.
Yeah. Luckily we were at odds for some things we found during the inspections. So we were able to get out of it nice and easy, and it was no hard feelings. But I'm just happy we weren't clear to close 5 days away, and things go haywire. You got deposits out. It's a scary situation. So I think obviously working with good people that have your back and can help you figure it out is what's most important.
Absolutely.
Yes, it is. That is the most important thing. And it's interesting because so many people go when they're buying a house and they don't understand the complexities of all the moving pieces, right? You have the real estate, the realtor side of it. You have escrow, you have title, you have the broker, loan officer, everything, right? The underwriting, investors. It can be very tedious in
for sure. There's a lot of moving parts.
A lot of emails flying back and forth.
Yeah. And then,
and deciphering, should I tell the client this right now?
That's my main thing.
It's like, is now the right time? Yeah. I can catch him at a bad moment.
And it's really interesting because, you know, there's this big push on tech for real estate, right?
Totally.
But there's the human component, and this also is entailed into fintech, is there's a human component, right? There's the emotional aspect to it, or there's a lack of understanding or lack of time. And the tech world can't solve all those issues. There's great tools out there, there's great companies out there. But the biggest thing is having, I guess you can call it your own team, right? Where you have a mortgage broker and they connect you with a great realtor or vice versa to get the job done, to take care of all these things that you don't need to know about. Like even the broker or the seller agent, they need to have a good relationship with an escrow company, because there might be something that might pop up on title that needs to be removed that no one knew about. You know, I've encountered that multiple times. So it's such a big thing of having a strong team, and especially kind of like with your background and where you're at right now. I mean, shoot, you're probably going up to #1 spot pretty soon here.
Hope so. That's what we're working toward.
Yeah.
Grinding it out and, you know, trying to just provide as much value as I can to each person and having the word spread. And then, you know, soon enough, I think, be able to help a lot of people around here.
Definitely. And now it's kind of taking a little churn. You know, one thing I think is important to understand is, you know, because there will be other realtors listening to this, are the failures we've all encountered. Do you have any you want to share? Something like
you said
growing experiences, we call them.
learning
experience. We love learning. It's hard.
Jeez, like there's almost like too many to count, right? I mean,
any that like excelled you kind of to the next level?
You know, just every deal is so different, right? I mean, well, one, I guess that I would, a couple that come directly to mind, right? I mean, everyone's got a million of them, you know, as much as we'd like to say we never mess up.
Yeah.
Of course, everybody does, you know, I think it's just how you remedy it. But you know, one of my first deals, I didn't recommend that my client get the plumbing lines scoped. It's something I always recommend now, you know, but it wasn't something I did. And it was an older home. It was something I should have recommended, right? Because as a first-time buyer, I think you don't know what you're supposed to be looking for, right? And this was a couple of years ago, and, you know, probably 2-3 months after close, toilets back up, you know, showers or crap coming out everywhere. And, you know, it leaks and just, it was shitty. And it was a buddy of mine, and, you know, I was so bummed, you know, and I ended up paying for everything to be remedied and put back to normal, and gave him a big credit to, you know, just get things right, because like, not only is he a good buddy, but like, you know, I felt bad, and, you know, obviously it's not my fault. Who knew that was ever going to happen? But it meant more to me that he says positive things about me than $2,500 means, you know.
Shows a lot about your character too. That's huge.
Yeah, for sure. So like things like that, like, you know, we work mainly with like friends and family and friends of friends and friends of family. So
that pressure,
I can't afford to have a bad deal. Yeah, I can't afford to have a bad deal. It's like, you know, every deal
might be real weird to screw up.
Yeah, exactly.
Paying for something like that, you can bet your ass you're not going to mess up on it again.
Yeah, exactly. And so, you know, then you learn quick. And so it's like another one, I just real quick, negotiated a lease back after sale. You know, I didn't negotiate a big enough deposit up front in the client's mind. And so, you know, I didn't want that to be a pain point for them for any point. So what I did is I did a holdback in escrow of my commission for the amount that they were comfortable with, paid back upon a clean walkthrough after the lease was over. So, you know, but negotiating those things properly up front, I mean, there's got a million examples.
Use your commission as the security deposit in a way?
Exactly. Yep.
Gotcha.
So, you know, I took a portion of the commission, designated to escrow and an addendum to hold it back so that the buyers comfortable. And I told him, I was like, hey, dude, look, if anything's wrong, keep it, It's not about, like I said, it really isn't about the money for us. It's really just having these people be comfortable, spread the good word. And, we make money by doing more deals with more people. So it's
And
not,
yeah, service based. It's funny because
yeah,
it's actually, you have a fiduciary duty, but you only get paid on the sale. So it's kind of like working
yeah, it's like a double-edged.
each other. Yeah, it's weird, but that's just
For sure, for sure. But yeah, I mean, I think like a good client relationship and them trusting you is gonna just pay crazy dividends regardless of if they close on a deal or not,
Yeah.
Absolutely.
But it's always great, just doing the right thing, and you can see helping somebody out, and especially, buying a home, it's for the majority of the people out there, it's a huge investment, regardless if they're like, oh, I'm going to stay there forever. Well, that's that's an investment, really.
Yeah.
It's always great
Mhm.
just setting somebody up, and and if their situation, go, what, they're not going to buy another home probably for the next 20 years. So I just helped them out tremendously. And it's always, I don't know. I always like that.
Oh yeah.
Yeah, you feel
And
good,
they love you
like
too. If they're staying in the
yeah.
house for 20 years, they obviously like it.
Yeah, exactly.
So they're like, oh yeah, I remember him.
Yeah. Hopefully they tell their neighbors.
20 years.
Remember Trent?
Yeah.
I
Yeah.
never cleaned out my plumbing.
Yeah.
That's a good story though. I think that's huge value for people to hear and things like that. It's just little tips to pick up throughout the podcast
It's huge.
Yeah, it's huge.
So
Yeah,
we're
for
starting
sure.
to kind of wrap up real quick. Is there anything that we didn't talk about that you want to discuss? Anything like that?
No, not really. I really appreciate your guys' time, and this is a cool platform to like really get out the knowledge that you have in your head that it's hard to portray in a quick
Hard to portray
Instagram
the value.
clip or
Yeah.
Exactly. I think myself, my father, our team here in San Diego, we have a lot of value to provide to everybody from first-time home buyers to seasoned investors, buyers, sellers, whatever it may be. We greatly appreciate even, any chance of a conversation just to pitch you on what we provide and, why we set ourselves apart and how we do it.
Yeah, absolutely, man. And then one thing, because we still are everybody's recovering from COVID, it seems like. And
yeah, didn't you just have it? You feeling better?
Yeah, starting to feel better now. It's the second time I got it. It's just it's a weird thing. First time I got it wasn't that bad. Second time I got it was a little worse, but antibodies just skyrocketed.
Yeah, exactly. You're not getting it again.
Yeah. And as we're coming out of this, though, with all these businesses that struggled, had a really hard time, we just want to give some local shout outs. So what kind of spots, like restaurants, bars?
You can point them out on the map if you want.
Yeah. Behind you.
Yeah, for sure. So yeah, this is where we are right here on 12th Street.
All right.
On 15th Street. You go one street over, you have Little Lunch Coffee. Shout out to my guy Drew. It's a little coffee shop right on the corner, attached to Zell's, which is a great restaurant.
Nice.
Heading further down, you run into Monarch, which is the spot right now. Killer ocean views, Monarch.
Yeah.
Ocean Pub. Up there you have Pacifica Breeze Cafe, Pacifica Restaurant. God, you got just tons of restaurants in the Del Mar Plaza up there that are all amazing. You have Del Mar Pizza, which is the go-to from growing up. It's been there forever. We're on 12th Street, right across the street. I'm looking at the sign right now. If you guys ever come down, we'll grab a sandwich over there, but Board and Brew. It's a legendary spot. Yeah. So just bunch of staples right around here in this immediate area. You go down Del Mar Heights Road right here. They just built out one Paseo. The Del Mar Highlands is always great. Everything
so
in there
like
from
a ton of fun, good places to go down there. Local shops.
Yeah, you can't go wrong. For
Perfect.
sure.
What
There's
about-
a million places.
What about the best way to get a hold of you or look into what you're doing? YouTube, Instagram, phone, email.
Yeah, totally. Yeah.
Automatic.
So, yeah, exactly. Feel free, my name, just if you Google Trent Cady, I've been doing as much as possible to, build out my searchability.
Yeah.
But my phone number will be on there on my Google business page. Our website is on there. The website's MikeCadyHomes.com. My cell phone number is 619-993-1816. You can feel free to email me at trentcadysales@gmail.com. And yeah, love to chat with you regardless of where you're at in the process.
All right.
Awesome. Well, you're the guy that we're going to talk to. Anything Del Mar.
I appreciate it. Yeah, San Diego, think of me. I'd appreciate it.
Yeah,
Absolutely, man. All right, Trent. Well, that concludes Homes Gone Wild for the day.
Yeah. Thanks for coming on.
Yeah.
Yeah,
Yeah,
man.
thank you guys. I appreciate it.
Oh wait,
That was fun.
what's your favorite surf spot down there? Not to blow it up,
Favorites?
Well, that's like the worst
Yeah.
thing you can do.
but
Favorite spot
what's your
to
second
go?
favorite? What's your second?
Yeah,
favorite?
yeah.
I was
I mean, you
live,
can't-
the least.
Yeah. What's the crappiest?
Imperial.
No, you go down to Blacks. I mean, you can't go wrong, right? That's
Everybody
probably,
already knows that,
our
so it's
go-
like, yeah.
yeah.
It's
It makes
an
it
easy one
easy
to
though.
throw out
Like,
there.
Last time I
Right
was
off
down
the-
there, though, I saw a shark. So
yeah,
Oh
it's
yeah,
a
we were
little-
just talking about
don't
that.
go
Is that
to
what you saw?
just don't go to Blacks.
Oh wait, no, is that made up?
yeah.
Shark.
Blacks anywhere in Del Mar is fun,
Everywhere in
it's-
Laguna is full of sharks.
Yeah.
Don't ever go.
Yeah. It's not fun.
Yeah.
Sucks.
Right, man. We'll let you
Yeah,
go. And yeah, thanks for being on our show.
Yeah, thank you guys. I appreciate it again. That was fun.
All right,
All
man.
right, have a good one.
See ya.
All right. Cheers. Later.